Hey traders, what's going on? Welcome back to the YouTube channel. I hope you're doing well. Just going to have a little chat with you today, just about a couple of things really that happened during the live trading session this morning. Now, this week, I've been going pretty heavy on gold, just looking for really strong key levels in the market. Just using multiple time frame analysis from like the higher time frames and the scaling down using like the 15-minute into the 1 minute, and just looking to get or take advantage, should I say, of some really good risk to reward ratio trades. So the time that I have been trading has been from 6 a.m. GMT time to 7 a.m. GMT time. So that's 1 hour before London Open, 7 o'clock. And what I found is that there's been a lot of volume in the markets for me to be able to take advantage of a few different variations of trades, whether they are retracement trades, whether they're continuations, whether they're breakouts, whether they're retests, whatever the weather, I'm in, as long as I get a good opportunity to place my stop loss in a good place and also get some good risk to reward. So that's exactly what I did today. Now, these trades were taken fairly early this morning, which was here, as you can see on gold. This is on the 1 minute time frame. Managed to take 1 to 4 out of the markets on this trade. Really decent trade here. The entry was on the break of the low, stop loss above the previous wick rejection here, and the idea was just to see price continue pushing bearish based on a couple of things. Okay, so let's remove just some of these lines so we can identify what's happening here. And at the black line is the focus. If you go to the 4H time frame, what you'll start to see here is the market had been previously pushing bearish. So we're talking since yesterday, actually, in fact, even the start of the week, the market has been pushing bearish. Now, the idea was this, that if price started to break below some of these levels around 89 or 1892, we should see a continuation down. Now, I did try to get into a trade yesterday, which I did close early. Unfortunately, I just managed to take an intraday buy, which worked out, but I closed a sell. And I did anticipate price to come down to some of these lows here, which is a little bit of a shame, but it is what it is. But what you'll find is that the market has continued bearish. So with that in mind, imagine now I'm waking up 5 o'clock in the morning and I'm saying to myself, what's the sentiment of the market today? Where can the market go? What's the ideas behind where gold is going next? First thing I want to do is identify the strength of the market. Now I'm looking across all my different pairs. I'm looking at Euro USD, USD Swiss franc, USD CAD, USD JPY, Aussie dollar USD. And what I'm trying to gauge here is the dollar strong? So if the dollar is strong, then that means in the back of my mind, I know that I'm in theory looking for sells in line with the overall behavior and structure of this market, which is bearish. Now scaling down to the 15-minute time frame, what I'm identifying here is how price is creating the structural lower highs and continuing to make new lower lows. Now, granted, it's not the best formation, but as you can see here, look what the market's doing. We have structural lower highs, we have new lows formed, and we also have price trading below the brick wall here. So now what I need to do if I'm planning to take a trade is identify the behavior of the market. So I'm looking for current behavior. I'm not looking for a perfect entry here. I'm looking for just an entry. Looking at current behavior. If the market is going to flip bullish and change behavior, we're going to continue to break above these highs. If we're not, then what are we going to do? We're going to sustain this level, and then we're going to see some sort of bearish behavior. So now that I have that in the back of my mind, I'm now scaling down to my 1 minute time frame, and I'm saying, what patterns can I find to trade this? Well, look here. We have the key level. We have the brick wall, which is the black jagged line here, whatever you want to call it, broken line. And what do we have here? We have a pattern. We have a structural high and a lower high. We have a structural high or low where price should trade above. We also have an area in the market where price is trending up. Now, the behavior of the market is bullish. The break of the structure indicates evidence of the market potentially changing. Then a failure to break the highs here. And then we have strong bearish momentum. And what am I looking for? I'm looking to take the trade or the break of the lows. Now, when I took this trade, it was, I think, just after the open of the new 15-minute candle. So I'm looking for price to first, and when I'm planning to take this trade initially, I'm looking for this market to pull back first to create a wick, because I don't want to jump in immediately, because more often than not, when the market's open, you will find that the first thing it would do, if the market closes bearish, it will pull back to create a wick rejection. And then only after it's created the wick rejection would it go down. So I'm not jumping in immediately. I'm waiting for the wick rejection to form. Once the wicks form, then I'm looking to jump into the trade. So price opens here. I believe this is the close. This is the open, the wicks form, whatever. Anyway, this is where I jump into the trade. Okay. And then I managed to close this for a 1-to-4 risk-reward ratio. The idea now is that the current structure of the market on the 15-minute time frame will continue bearish below the brick wall, in line with the key level being respected, and eventually will make a new lower low. That's the idea. 4H at this stage is pushing bearish, and the idea now is that price will continue to make a new lower low on this time frame as well. Now, what happens next? After I close out of that trade, I decided that I wanted to look for a potential reversal. Now we're coming close to 7 o'clock. What has happened at this stage is that the 4H time frame has already pushed really strong bearish. Now, every candle has a range, meaning that there's a very high chance that price will retrace its own range here. So I decided to look for potential buying opportunities. Now, I'm not flipping my bias here, and I'm not changing it sporadically. This is really, really detailed and focused trading. And I'm trading patterns that repeat themselves over and over again, using my experience of trading gold and understanding how the 4H pushes a range and fails to push lower after exceeding, then, you know, reverses, etc., even for a short period of time. I'm not trading the trend. I never trade the trend or the overall big trend. I'm looking for intraday trends. I'm looking to get in and out of the markets within 1 or 2 candles. Okay. So here, yes, the market can continue making lower lows, blah, blah, blah. If I took the trade, let's say I took the trade like this, on the break of this major low, all right, with my stop loss above the structure here, and I was going for my targets, let's just say 1 to 2 for argument's sake here, I can take this sell. This is fine. Or even here, actually, I can take the sell. Okay. Stop loss above the key level, I can take the sell. I'm happy to do that. But as an intraday trader, I'm not happy to hold this whilst I'm 1 to 4 up and then looking for this to continue down. If I'm going for a home run, maybe, but in most instances, no. I know that the market pushes and exhausts. So that's the thought process here. So after that, what I did is I jumped into a buy. Why? Well, we have a very strong push phase in the market. I'm now expecting the market to pull back to at least 50% of the previous move. That's all I'm looking for, around 50%. Okay. So I jumped in this buy with stop loss below what seemed to be the higher low at this stage. So the structural low with the wick rejections, and then the structural higher low. The idea is the break of the structure will now create a new higher high, enough for me to go break even. Unfortunately, the market, well, not unfortunately, the market did push up, but it continued to fail. And at this stage, I closed the trade here, stop loss half. Okay, so that's fine. Always managing risk aggressively. I mean, super, super aggressively. Next, I see the market pulls back again. Now, I'm isolating this area here. I know this is the most important level in the market because this is now the major low on the higher time frames. Let's mark that in with a level like so. Okay. This is now, oh, for goodness me. How many lines do we have? We can remove the high, it's the middle line. Okay. So now the market has pushed really strong bearish. And at the stage in the back of my mind, I'm saying to myself, okay, well, look, if we bring this level over here to the left, what do we have? We have multiple wick rejections previously. We also have a level in the market where prices push really strong bearish, and there's a very high chance now that price can react. Going to the 15-minute time frame, looking at the middle level here, what do we see? A strong bearish candle, and I'm anticipating here at this stage for the market to do what? Retrace at least 50%. So I go to the 1 minute time frame, and I'm looking at the 1 minute time frame, take the trade, stop loss half on it. We're closing out early, no problem. Bob's your uncle on that one. But then I see here again, waiting patiently, multiple wick rejections at this key level. 4H candle has already pushed a range. We can see the 15-minute has pushed, anticipating an exhaustion back to 50% here. And then what do? I look to take the trade with multiple wick rejections. Again, let's just say I'm risking 1% here, prepared to close this at 0.25 or even half a stop loss. I don't want to give my trade room to breathe. I want to be right in the direction, behavior, and momentum. If I'm right, I'm in. If I'm not, I'm out. Simple. Okay? I was saying today to my students that I average 3 losses. Okay, this is what I try and do: 3 losses for 1 R. Imagine that. Listen to the science. I'm prepared to take 1, 2, 3 losses, which is only equivalent to 1 R. So when I take a 3R win, guess what? I'm laughing. I make 2R on a trade. And I had 3 opportunities to make 6 times my money, near enough, based on my equity curve. Pretty insane, okay? Manage risk aggressively. So, saw the wick rejections, saw the bullish close, jumped in. Where's my targets? It's always going to be at consolidation or a major key level in the market. I'm always going to target the highs, which is the structural 4H. And I'm always going to watch the trades. I'm in the trade to make sure that if the market's pushing, I can hold it. If it's rejecting, I close it. I should have held it to these highs. I didn't. I was actually in this trade live on the trading session. And I asked my students, should I hold this trade? Should I not? They said hold, but I already closed it. It is what it is. So anyway, now I'm sitting up around 7R this morning. Now, I took this sell here on gold. Really, really bummed out about it just a little bit. I don't want to be, I don't want to be greedy here and say that I'm not satisfied with my 6R, but I'm always looking to, maximize my profits here. And identified the behavior of the market. We have a brick wall here, price feints break above, wick rejections, looking to jump in this trade on the break at this level here around 1884.46, looking for a continuation down. Price started to break this level, and guess what it did? I hit the buy button. Rookie error, but it happens. I hit the buy button, and unfortunately, I gave back around 0.4 R of a position. So just shy of half an R of a position, which it is what it is. Kind of bummed about it. So at this stage now, obviously, you're just dealing with your emotions. The reason why I was bummed because the market did start to move in my direction. We could have managed this really well, and it would have been a good move to the downside, regardless whether it be a break even, stop loss, half stop loss, whatever. It was just a good mood. If you're right in the direction and you take the trade in the wrong direction, it can mess you up a little bit. Anyway, so I'm still up 6.5 R, not a problem, but just cheesed off. So I wait patiently now. I think I went over to Euro USD at this stage. As you can see here, I identified the structure of the market. Same again, just from higher time frame. What are we identifying? We're identifying here dollar strength. 15-minute time frame, what we're identifying, a strong break below a key level, 2163. Coming down to the 1-minute time frame, what am I identifying? Well, keeping it super simple, we're seeing a trend, low lows, lower highs. Break, retest structure here. What do? I jump in the trade, hit the sell. Guess what I did? Because of what happened with gold, I was a little bit worried to take a loss on this one. I just felt like the momentum wasn't there. And I'll talk about it in a second. I actually think I took a half stop loss on this one first. This trade was taken at 1817. Yep. Then what I did is I took the buy for the retracement here. So I went for a 1-to-2 risk reward ratio trade on gold next. Same principles here. We have a breakout of the level, break back into a level, and the idea was price will continue bullish back to some of these highs. Closed out here immediately with another very small stop loss. So it was about half a stop loss on this one. And then that's when I jumped into the Euro USD trade. So I had taken an accidental loss, thinking I'm taking a sell, took a buy. Then I took a sell on gold. Yeah, so that was the loss. Then I took the sell on gold, which was a small stop loss. And then I went over to Euro USD here. And then, I saw the patterns, saw the dollar was strong, saw the 4H time frame, saw the 15-minute close below this level here really nicely, had a nice retest, took the trade, and guess what I did? I closed it and slight profits here. I just didn't want to be in the trade, didn't feel good about it, and look, it hit my take profit, but it happens. So missed out on that one. It is what it is. GJ was taking a look at a few moves here in the market. Again, always managing risk really aggressively. As you can see, looking for the market to show signs of reversals, breakouts, etc. here, and manage this one really aggressively. I just want to make sure that I took this one. This one wasn't just an illustration. Oh yeah, I took the buy there. Yeah, I did take the buy there, and I managed this one really aggressively. So this was just a stop loss half on this one, and then the sells. Did I take the sells? No, I didn't take the sells. I just took the buy. So this one was just for illustrative purposes. This was a stop loss half on this one, and then finally I went over to gold here. Again, I managed to get into the buying opportunity. Again, same principles. Not going to go into it too much details, but price pushed down, blah, blah, blah. And then I took the trade and managed to close this at like 1.5 R with pretty high volume in this market. So this put me back at 1 R over here from these two little losses, 1 R here. Then I closed this at 4. So we're looking at 5, then close this at 3.5. So 8. So the session roughly, I closed the session around 7 R profit today, which was pretty decent. The London session, of course, pretty decent. And then we was just looking at this buying opportunity here on USD Swiss franc, which was beautiful, easy to understand. Dollar strength again, look, buys, bish, bosh, bash. And then the potential sells here, which wasn't taken. The buys wasn't taken either, just so that you know. But the idea was to see price continue down, which it did. Unfortunately, if you did take it, it would have been a stop loss. But great move here. Even if you missed this one, you're jumping in this one all day long. You know, you're identifying the breakout, break back in. You're identifying the structure. You're taking the trade. And you're looking for your 1 to 3. And that should have been a wrap. You know, least closing the day plus 10 R up for the London session. So that was my morning. What's the point in me sharing this with you today, guys? I just want to say to you, please just be prepared to understand the process of your journey as a trader is going to be like this. You know, it's going to be building blocks, and you have to just be prepared to work with this build, because most traders think that you're going to come into the markets and you're just going to jump in and it's just going to be plain sailing, but it just really isn't going to be like that. You're going to find yourself taking more losses and break-even trades than you will wins. It goes against what we, understand as humans to be natural. Work hard, get rewarded. Trading, work hard, lose 70% of the time. It's really rough, tough to deal with. But I just want to say this to you guys. Look, today I finished strong in profit, even though I took a couple small losses here and there and a few break-even trades here and there, because this is my mindset. I'm willing to play this game for as long as possible, okay? Because I know eventually this will come. Once this comes, what I need to focus on is making sure that I continue to play this game and keep my wins above my previous push phase, okay? Now, I will illustrate this on Instagram much better, but just for you guys, I want to share this with you. Once you push, then again, you're going to go through this phase where you take small losses here and there, and you might have a little drawdown, but you have to stay patient, disciplined, because you don't know when this is coming, this big win. Once this big win comes again, guess what's going to happen? You're going to have these small drawdowns, and you're going to have these little breakouts and break back ins, but you have to remain patient until this happens again. And then this is where you will start to see your success. Most traders think that, guess what? It's all about these big wins, big wins, big wins. But is it? No, it's not. It's about taking small wins, small losses, small wins, small losses, small wins, small losses until the big win comes. Then, again, same process. This is your cycle. Again, same cycle. And then guess what? As long as you're managing risk aggressively, you're making sure that you're not over trading, you're not revenge trading, you're not opening up your stop loss. When these big wins come, guess what happens? This is what your equity curve is going to look like. It's going to look gorgeous. So don't be phased. Loss is a loss. Just make sure that you're willing to take the risk. If the risk makes sense, take the risk. Make sure the rewards are good. So that was my trading morning. Been a very good month for me so far. Really good month for me so far. Been trading fairly heavy volume and just really aggressively managing my risk. and also trying to capitalize on some of these moves when they're moving, holding them for a little bit longer. But yeah, that's my focus. I want you to focus on that as well. Anyway, guys, that's me for today. It is Thursday. I hope you have a great Friday, great weekend. I will be back for the weekly Forex Outlook and reviews. I know you have been requesting it. Make sure you smash that like button for me, please, for the algorithm, all that boring stuff, so that everyone else can have an opportunity to watch some of these videos. Subscribe if you haven't, turn on notifications. And until next time, everybody, continue to trust the process.